There are three big growth ETFs that over the years have given me the greatest returns of anything that's on the growth side of my portfolio. And today I want to share them with you. Hey everybody, today I'm going to go through my top three growth ETFs. These are some of the biggest ETFs that I have personally owned over the years, would have given me the greatest returns on the growth side of my portfolio. And I'm going to show you something at the end of the video that's going to kind of back up my idea here that these are three of the best investments that you could put your money in today. And there's a lot of information here, so let's get right to it. I'm going to go kind of fast. I'm going to start with the number three ETF. We're going to work backwards, and that's the VGT. The VGT is a Vanguard Information Technology ETF. The Vanguard Information Tech ETF is a beast. Okay, this has $87 billion worth of assets. It's huge. Institutional investors have money in here, pension funds, individuals like you and I, everyone. So if you look at the sector weightings chart, it's pure tech. There's nothing else in here but tech. This is not a mix of companies like the NASDAQ 100 where you have Microsoft and Dollar Tree in the same index. This is nothing but pure technology. As you can see here, holdings, 323 companies are in this fund, okay? It's an animal. The holdings, let's take a look at those. Microsoft, Apple, and NVIDIA. They make up almost half of the entire fund, just these three companies. Now, there is some danger in having three companies have that much weight in an ETF, but these are three gigantic companies that dominate, has significant market share in their respective businesses. So I don't think there's a whole lot of risk in that regard. Let's take a look at the market cap weightings. Typical Vanguard fund here. Okay, you have everything from mega cap all the way down to micro, although it is heavily weighted towards the larger companies, with mega cap being number one. Let's take a look at the 10-year total return. Look at that chart. It's beautiful. Bottom left to upper right, baby. That's exactly what you want. You see in the upper right-hand corner there, 10-year total return, 532.5%. Means if you invest 100 grand in 10 years, you'll have $532,000. That's a gorgeous chart. Now let's take a look at the average annual, because I like that. This is the average annual performance. As you can see, 10 years average annual return of 20.25%. That is a heck of a return. Remember, the S&P returns 12% on average. So this is outperforming the average significantly. Now let's get to our number two growth ETF, and that is the ITB. The ITB is the iShares U.S. Home Construction ETF. This is a much smaller fund than the tech fund we just took a look at. Not nearly as big as the VGT. If you take a look here, only 48 holdings. Now there are that many large publicly traded builders in the stock market. Most builders are regional or small builders that only build in one or two states. So there's not a whole lot here in terms of cross-section. We're going to have some additional companies in here, and I'll show you those when we get to the holdings in a minute. But only 48 companies, and you have $3 billion in assets. If you take a look at the sector weightings, consumer cyclicals make up the most. Those are companies like Home Depot, and Lowe's. Those are typical consumer cyclical companies. So let's take a look at the holdings here. D.R. Horton and Lennar, new construction home builders. Those are the two biggest publicly traded in America today. There's some others listed there, NVR, Pulte, and then you get into the derivative companies like Home Depot, Sherwin-Williams, Lowe's, TopBuild. They all sell parts. They all sell services and things to help builders build homes, but they don't build the homes themselves. Market cap weightings, mostly mid-cap. Okay, that's because a lot of builders have not gotten big enough to be considered mega cap or large cap. It's just not how the industry functions. So most of those builders are going to be in that mid-cap territory. Now let's take a look at the 10-year chart. Another beautiful chart here. Okay, 455.74 total return in 10 years. That's beautiful. People need homes, baby. People need homes. Average annual return is 18.42%. That's the average per year for 10 years. Another winner. Okay, now we get to number one. Number one, the ETF that I personally, let me say, the investment that I've personally made more money in terms of return than anything else I put my money in. Okay, this is the big daddy, the daddy Mac, whatever you want to call it, the SMH, the VanEck Semiconductor ETF. The VanEck Semiconductor ETF, ticker SMH, it has $23 billion in net assets, considered a large growth investment fund according to Morningstar. If you take a look here, there's 27 holdings. Okay, not a whole lot. These are companies that make semiconductors, a fancy word for computer chips. It's been around a while, since 2000. Assets, like I said before, $22 billion. You've heard of most of these companies before. Sector weightings chart, PureTech. Okay, this is a subsector within technology. They make computer chips, and that's all they do. Take a look here. You see mostly large cap, mega cap. There really aren't any small companies that make these chips. Okay, the machines that make these chips cost millions of dollars. You're talking about putting very tiny pieces of metal on very tiny pieces of metal in a dust-free environment. It's very expensive to manufacture these things. If you take a look at the holdings here, NVIDIA and Taiwan Semi make up most of this fund. You've probably heard of some of these other companies. Texas Instruments, you've probably heard of. Intel, Qualcomm's farther down on that list. Maybe you've heard of Broadcom before, but NVIDIA and Taiwan Semi are the two biggest. It's interesting because Taiwan Semi actually is the contractor for NVIDIA. NVIDIA doesn't make any of its own chips. They design them, and then they ship them off to the plans off to Taiwan Semi, who actually produces the chips for them. Now take a look at this, because this, if you're an investor and this doesn't make your mouth water, I mean, I don't know what else will. Look at that, baby. Bottom left to upper right, forget about it. That's a chart. 10-year return, 996%. Are you freaking kidding me? That's fantastic. That's almost 1,000%. Look at the average annual here. 27.04%. This is a 10-year table of the top performing ETFs. Who's number one here? The Daddy Mac. SMH, 973 total return over 10 years. Forget about it. And then you go down. SOX, PSI, XSD. These are all semiconductor ETFs. Okay, the only difference here is how they weight the companies. And then you get down right below semiconductors. What do you get? VGT, the broad-based tech fund. Like I said, this is my number two, 529%. Then you have some other various tech companies, and then you get to ITB, 422%. Below that, you have some other tech funds, a growth fund. At the very bottom, you see the S&P benchmark, which is 228% in 10 years. So I have my three ETFs that I just gave you have made this table pretty high up on this table. SMH, VGT, and the ITB. So if you want to make some money, you're looking for a good return, take a look at these ETFs, see if they fit into your portfolio. If you are invested in these or you've heard of them, you've done some research on them before, be sure to comment below. Let me know what you think. Don't forget to like and subscribe, and I'll see you next time.